All right, let's talk about one of the most common and honestly costly mistakes that investors make. We're going to uncover a single number, one that's usually hidden in plain sight on company reports, that can totally change how you look at a company's profits. So let's get right into it. You've seen this headline a million times, right? A company you're watching, maybe you even own it, reports these massive, record-breaking profits. The stock starts buzzing, all the news is positive. It feels like a huge win. It's pretty exciting stuff. But hang on a second. Before you start celebrating, you got to ask yourself this critical question. Does all of that profit actually belong to the shareholders, to you? Well, more often than you'd think, the answer is a big, fat no. Yeah, this is what I like to call the headline profit illusion. That big, flashy number you see first, it's designed to grab your attention. But trust me, it is not the whole story. We've got to peel back the layers here. So here are the two key terms you absolutely need to know. The headline number is the total group profit. Think of that as the entire pie. But the number that really matters to you, the investor, is the profit attributable to equity holders, or PATEH for short. That's your actual slice of the pie. So how does this whole division of the pie actually happen? Well, to understand it, you don't need some complex accounting degree. All we need is a really simple partnership analogy. Okay, so picture this. A company, let's just call it Parent Co., teams up with another company on a joint venture. They agree to a 50-50 split. Now, their new business is a huge success. It makes $1 million in profit. Fantastic. But here's the thing. Accounting rules often mean Parent Co. has to report that entire $1 million as part of its group profit, even though they only own half. So what happens? Well, 500,000 rupees has to be paid out to their partner. That's what's called the non-controlling interest. The other 500,000 is what Parent Co. actually gets to keep. That is your number, the profit attributable to equity holders. Okay, so an analogy is one thing, but does this happen on a scale that actually matters? Oh, absolutely. Let's look at a real-world example from a JKF financial report to see just how dramatic this can get. Just look at these numbers. For the first half of their fiscal year, the big headline profit was a massive 4.92 billion rupees. Sounds amazing, right? But the actual profit attributable to equity holders was only 849 million. That is a staggering difference. So that means there's a gap here of 4.07 billion rupees. I mean, that's not a rounding error. That's the vast majority of the reported profit. It's almost like it just disappeared from the shareholders' pockets. So the big question is, where in the world did 4 billion rupees go? This isn't some shady accounting trick. There's actually a very specific and totally legitimate reason for this massive gap. That 4.07 billion, it went to their joint venture partners. See, companies do this all the time to share risk or get into new markets. In this specific case, a huge chunk of JKH's profit came from a 50-50 joint venture in their auto business. That partner's share is the non-controlling interest, and that money belongs to them, not to the JKH shareholders. So what does all this really mean for you? What's the bottom line? What's the one number you absolutely have to look for from now on? It's this one, profit attributable to equity holders, or PATEH. This is the number that matters. This is the true, real profit that the company you've invested in actually gets to keep. This is your slice of the pie. Seriously, if you remember nothing else from this explainer, remember this. Don't get distracted by that big headline number. Always scroll down that report and find the PATE line. That is the number that truly matters to you as a shareholder. So I'll just leave you with this one question to think about. How many company reports have you looked at, gotten excited about that big profit number, without ever checking for the PET? It's such a small step, but it can completely change your entire analysis. And as always, please remember this is just for educational purposes. It's not financial advice. You've always got to do your own thorough research before making any investment decisions.